Welcome to the Capital News. I'm your host, Alex Kreitis. Today is Wednesday, February 17th, 2021. Thank you so much for joining me. Title of today's podcast, Robinhood, Reddit, and Roaring Kitty, oh my. There is going to be a hearing tomorrow in the House Financial Committee that has representatives from Robinhood, the online trading platform that we've been discussing here recently, the social media platform Reddit, and somebody who goes by the name of Roaring Kitty. That's basically his handle on YouTube. He has another handle on Reddit. His real name is Keith Gill. We'll get to that. We're going to go through a couple articles today. But the headlines of these articles and just what's going on, if this doesn't prove to you the mania and the nonsense of the current environment, if this doesn't just put the final nail in it, I don't know what is. And I'm sure this isn't the final nail. I'm sure it's going to get a lot crazier from now until whenever this insanity comes to an end. Your guess is as good as mine, but I think it's going to get even more insane. You didn't think it was possible? Strap yourselves in, buckle up. Okay? Before we get to that, we're going to get to some market performance. And then real quick, obviously, I'm sure many of you have heard the news that Rush Limbaugh, very, very well-known talk show, radio host, very conservative, very influential in the conservative movement within the GOP, has passed away at the age of 70 years old. I would listen to Rush every once in a while. Had some interesting takes. A force to be reckoned with. There's no ifs, ands, or buts about it. I mean, just one of the most popular talk radio show hosts of all time. And he proved himself to be an American success story, whether you love him, despise him, or somewhere in the middle. He did what he thought was right. He voiced his opinion, gave his analysis, and he proved successful. I mean, a lot of people that didn't like him, that disagreed with him, would listen to his program just to understand where he was coming from, to hear his arguments, to understand maybe what types of policies, or at least some of the arguments that would be framed within the Republican Party. That's how influential Rush Limbaugh was. And he's obviously had a big impact on other conservative talk show hosts and media show hosts as well. Sean Hannity, Mark Levin, Dan Bongino, I'm sure Ben Shapiro, and several others that are out there across the country, coast to coast. So, of course, I didn't agree with everything that Mr. Limbaugh stood for, the things that he argued. I would have wished, obviously, and that's why I do this show, because I want to put a show out there, a podcast out there that sort of encapsulates everything. A lot of the shows that are on talk radio are strictly politics, or with a huge slant towards politics. With the megaphone that Mr. Limbaugh had, it would have been, I think, very helpful if he gave a bigger voice to some of the things that we talk about here on the Capital News with respect to the economy, monetary policy, and how all of these things are connected. But to each his own. That's my avenue, and, step by step we're getting there. But Rush Limbaugh, may he rest in peace. So market performance, the dollar index is at 90.92. Getting closer to a 91 handle once again, putting some pressure, some downward pressure on gold, but silver is still maintaining at 27 handle. We'll get to that momentarily. Not a lot of movement right now in the overnight trading session with respect to the currency markets. Bitcoin at $52,100 per coin. Despite the run-up in the dollar, Bitcoin continues to go higher as well. Dow Jones Industrial Average. Overnight futures trading is flat. The S&P 500 is also in the red, down 0.2%. NASDAQ 100 is also down about 0.4%. Choppy day on Wall Street during the day session. Japanese cash trade giving back 0.1%. A sea of red across the pond in Europe. And the Australian cash trade is relatively flat. On the commodity front, we have WTI at $61.53 a barrel, Brent at $64.87, flirting with that 65 handle, a number we have not seen since last year. Natural gas, $3.27, continuing its momentum to the upside. Gold at $1,782 an ounce. Silver at $27.22. Have to throw in copper here because we're at $3.92, getting close to that four handle. And these commodity prices, folks, as I've been stating here, are just going to continue to climb higher until they don't. I mean, you're starting to hear it in the mainstream media. You're starting to hear it on those mainstream financial stations about a super cycle with respect to commodities. We've been all over this. We've been talking about this for months. When you have a printing press that is just turned on overdrive, where do you think this money is eventually going to find its way to? Okay? We know it's going into financial assets. We know it's jacking up prices in the equities markets. We know it's bidding up bond prices, suppressing yields, although that might be unfolding here. And if that happens, look out. Because if they want to control this to get yields back down, they are going to have to print an exorbitant amount of money. And again, if you thought last year was bad, strap yourselves in. This one is going to be that much worse, that much bumpier. Okay. Now, we continue to see with respect to the energy prices what's going on across the country here in the United States with this huge cold spell, ice storms, snowstorms, what have you, a continuation of rolling blackouts affecting millions of people, especially in Texas. This is a disaster. Now, these things are, of course, rare, which is why it's getting so much attention, but it's getting so much attention, too, because this is affecting real people. I mean, you have people's pipes that are bursting. People are freezing, okay? That is not something we ever want to see, and it's not something that should, quite honestly, ever happen in the United States of America. We would hope that it doesn't happen anywhere, but in this country, with the amount of wealth that we supposedly have here, with the trillions of dollars that we print and spend, this type of thing should never happen. And if it does, it should be remedied very quickly. And this is likely going to continue for at least another day or so. And we continue to see storms making its way through the country, coast to coast. And now the East Coast is going to get slammed again with more ice, starting in the south and then making its way north. So we can expect power outages down south. I think Duke Energy, a major utility company in that region, has already been forecasting that millions will be without power. The question is, for how long? So this is something to pay attention to. It's something that will start the conversation up with why energy security is so important, why infrastructure is so important. Well, if it was so important, which of course it is, but why were the politicians, why weren't they doing anything about this for years? For years. This was supposed to be a big talking point. Well, it was a talking point, but there was no action behind it with respect to the Obama administration. Donald Trump was supposed to be this massive builder. He knows construction. He knows contracts. Where is it? And now we have the Biden administration, the Obama administration 2.0 in there. What are they going to push through? And this is obviously going to be secondary or tertiary to the $1.9 trillion monstrosity that they're trying to force feed us. Okay? I imagine now it's going to be infrastructure will come second, and then maybe the Green New Deal and some healthcare initiatives after the fact because of what's taking place right now. But these prices, oil, natural gas, this stuff continues to go up. What do you think these prices are going to make their way into? Every single item out there. And if the trend continues beyond a couple months, this continues throughout the year, or if this is just all of this is inflationary, it's not a question of supply and demand. It's not a question of geopolitical events. Just with the money. Look out. Because we talked about yesterday with inflation. It's announced. We're starting to see major corporations say, yeah, prices are going up. We're going to have to increase our prices to our customers as well. This is the first of many public announcements that will be making their way through the system. And again, as I noted yesterday, it is not just the prices that you have to pay attention to. It's also the volume that you are purchasing. If it was 20 ounces before, is it now 16 ounces after the fact? If it was an item that you got 2 dozen worth of something, is it now, now you get 20 as opposed to 24? And then what happened with the price? because it might be a double whammy. You might have a higher price and you're getting less volume. They're going to squeeze it because these companies are trying to make profits. They're trying to survive. This did not have to happen, but this is what happens when you engage in these types of policies. When you engage in Banana Republic policies. Who would have thunk it? If you engage in Banana Republic policies, you end up looking like a Banana Republic. Rolling blackouts, people in food lines, people freezing and starving to death, prices of everything going up, prices of things that matter, I should stress, are going up and continue to go up. We're a Banana Republic. This isn't the United States of America anymore. This is a joke. And we're going to have a few people tomorrow testifying before Congress. They don't know what they're talking about. Being asked questions by people who don't know what they're talking about. I don't know whether to laugh or cry. This system is a complete joke. Complete joke. I just hope everybody's prepared, and I know that's not the case. And to round it out, Uncle Sam's 10-year junk note is yielding 1.28, so a little bit of relief there with respect to yields, which obviously have been climbing. This, to me, is a direct result of the inflationary policies that have been taking place in Washington, D.C. Some economists and financial experts, if you will, are out there saying, well, this is just a function of growth and that the bond market is just starting to price in economic growth. I think that's a bunch of hogwash. This is inflation. That's what the bond market is sniffing out. It smells a rat, and it's a big one, and it's going to be extremely costly. And so the question is, what will central banks do? How high will they allow these yields to keep going? Because there's going to have to be a point where they're going to say enough's enough, because their whole objective, yes, it's to create, I guess, inflation, so they say, but it's also to have full employment, but to keep borrowing costs low. Well, what's their range? What are they willing to tolerate? Because a lot of borrowing costs for financial assets, think the 30-year mortgage, is tied to the 10-year Treasury note. Well, do they want mortgages to remain at all-time lows so people can go out and buy houses that are at all-time highs? You see the balancing act they're trying to do? They got too many balls up in the air. They've been trapped for a few years. It's finally all coming to a head, and they don't want to take responsibility. So as we've made note here, they're going to fight inflation with inflation. Because if they want to put these yields lower once again, they're going to have to go out across the Treasury curve and buy up those bills, notes, and bonds to bid up the price to suppress the yields. They're trapped. They know it. Be on the lookout for some presentations we put online, on YouTube, wherever we post. TheCapitalNews.com, we're going to be doing some capital economics presentations. I'm working on the graphs, the slide presentation. There's going to have to be several of them because there's just that much information. I throw a lot of information out on these podcasts in the 30 minutes that I put together. I tell you all the time, these charts are through the roof. You're looking at vertical graphs, lines that go straight up, completely unsustainable. Some of this stuff never seen before in the history of this country and really around the globe because other central banks and governments are doing the same thing. And so we're just going to piece this together piece by piece. Yes, I talk about it, but I'm doing these other presentations so you can see what I'm talking about because I think it's important. All right, to some of these articles. The first one is out of Investopedia, great source. Robinhood Reddit CEOs to testify before Congress on GameStop. Okay, everybody remembers GameStop, right? And all of that stuff that happened a few weeks ago. Robinhood's business practices may be targeted. The Committee on Financial Services of the United States House of Representatives has scheduled a hearing on recent market volatility involving GameStop stock and other stocks. The hearing will be held virtually starting at 12 noon Eastern Time on Thursday, February 18th. Among those called to testify are Vladimir Tenev, the CEO of online trading firm Robinhood Markets, and Steve Huffman, CEO and co-founder of social media community and online forum site Reddit. The committee is chaired by Representative Maxine Waters, a Democrat out of California, Impeach 45, The press release announcing this hearing states, since becoming chairwoman of the House Financial Services Committee, Congresswoman Waters has transformed the committee to focus its agenda on fairness, protecting consumers and investors, and accountability for large financial institutions. I wonder if she's ever investigated Congress. I wonder if she's ever heard of a deferred prosecution agreement. I wonder if she's ever heard of the market rigging of major banks and other financial institutions across various markets. What about the fairness and looking out for consumers there? Where's she been? Because she's been there for a long time. She has made it a practice to call committee hearings with CEOs of big financial institutions and companies to hold them accountable. How? Who's lost their jobs? Who's gone to jail? Previous statement by Representative Waters. Representative Waters released the following statement on January 28th in the wake of the GameStop stock trading controversy. In it, she casts hedge funds as an enemy of ordinary American savers and investors. Hedge funds have a long history of this is her statement, by the way. Hedge funds have a long history of predatory conduct, and that conduct is entirely indefensible. Private funds preying on the pension funds of hardworking Americans must be stopped. Even though these hedge funds, manage money for pension funds. Private funds engaging in predatory short selling to the detriment of other investors must be stopped. Again, complete ignorance on what short selling is and how it is a good thing for markets. I went through this before, but I'm going to bring it up again. Short sellers, especially those who prove successful, and it is extremely difficult to prove successful because there is just an upward bias when it comes to the stock market. But these short sellers, most of them make their names by uncovering fraud. That is a good thing. Who wants to support businesses that are committing frauds? Short sellers, very much so, have a purpose and belong in the marketplace. She continues, private funds engaging in vulture strategies that hurt workers must be stopped. Addressing that predatory and manipulative conduct is the responsibility of lawmakers and securities regulators who are charged with protecting investors and ensuring that our capital markets are fair, orderly, and efficient. Newsflash, our capital markets are not fair, they are not orderly, and they are not efficient. Okay, so good luck. They have missed the boat for years. As a first step in reining in these abusive practices, I will convene a hearing to examine the recent activity around GameStop stock and other impacted stocks with a focus on short selling, online trading platforms, gamification, and their systemic impact on our capital markets and retail investors. We must deal with the hedge funds whose unethical conduct directly led to the recent market volatility, and we must examine the market in general and how it has been manipulated by hedge funds and their financial partners to benefit themselves while others pay the price. Now, for those of you who may be joining me for the first time, I highly suggest you go back and listen to a handful of podcasts we did during this whole frenzy with respect to GameStop, AMC, BlackBerry, all that crap. Because I'm not going to have enough time to go into it today and rehash everything, but this woman, Maxine Waters, is off her rocker, doesn't know what the hell she's talking about, yet she chairs a very important, very powerful committee, the House Financial Services Committee. And this is going to be propaganda for both Republicans and Democrats on this committee. And this is obviously in the House. I imagine it will also take place in the Senate at some point and form as well. And it's just going to be another charade. This is a dog and pony show. This is what these people do. We talk about market manipulation here all the time. We bring up the deferred prosecution agreements here all the time. We talk about how nobody is held to account. Nobody loses their job. Nobody goes to jail. And the shareholder has to pay for it. Not the CEO, not the board, not the managing director of the trading desk. The shareholders. And the rest of the market, who's been manipulated. And she wants to talk about fairness and looking out for investors. These people are a joke. Continuing with the article. Robinhood and payment for order flow. In addition to singling out hedge funds for criticism, it is likely that Robinhood CEO Vladimir Tenev will face hostile questioning about his company's actions in the GameStop affair. In particular, the committee memorandum notes that payment for order flow has been Robinhood's chief source of revenue since its inception, and that its decision to restrict trading in GameStop and other stocks may have been influenced by its business ties to investment firms that were caught in short squeezes on these stocks. Recall that Robinhood does not charge commissions to trade on their platform. Instead, it collects all of the data that people are trading, and it sells those order flows to institutional investors in hedge funds. And I do believe one of those hedge funds, Citadel, the CEO of that, I believe his name is Ken Griffith, will be testifying as well. So this is going to be a very interesting hearing. It's going to be a circus. It's going to be a joke. There's going to be a bunch of lying and BS, but it's going to be something to see. It's emblematic of where we are in history. This is a banana republic in decline, and these are the people that you're just going to see on TV. This is just what you see. The committee memorandum also notes, in December of 2020, the SEC charged Robinhood with making misstatements about the firm's receipt of payment for order flow and for failing to comply with its duty to ensure that customer trades were executed on the best possible terms. Robinhood's failure to satisfy its best execution obligations resulted in more than $34 million in aggregate customer losses. Robinhood was censured and agreed to pay $65 million to settle the action. Continuing, Robinhood and gambling addictions. This is where it becomes interesting, okay? Gambling addictions, because that's what we've turned our markets into. It's a casino. In addition to concerns about the impacts of payment for order flow, the committee memorandum also notes that some attribute the current controversy itself to gamification of investing and to the increasing role that social media and technology play in capital markets. The memorandum adds, quote, gamification involves tactics used to engage customers to transact, such as increasing use of notifications, prizes, and other psychological tools and design elements to increase rapid trading and short-termism instead of a more cautious approach. Robinhood in particular has been accused of using gamification to increase usage of its app, possibly to the financial detriment of its clients. Examples include designs to appeal to younger users, including digital confetti to celebrate transactions, colorful illustrations, and its allowance for users to tap up to 1,000 times daily to improve their waitlist position for Robinhood's cash management feature. This has led to criticism that gamified online trading platforms such as Robinhood encourage behavior similar to a gambling addiction. That's exactly what's going on here. Bright colors, bells and whistles going off when you do something. I mean, it's like you're in third grade. Everybody gets a trophy. Congratulations, you bought a stock. You probably bought a stock that was being pumped by some idiot on some social media platform, and it's a company that's going bankrupt. Oh, well, the stock's only trading at $1 a share. That's a buy. That's a steal of the century. It's at $1 a share because they're going bust. It's going to zero until you can convince enough idiots out there that it's at $1. That just means it's cheap. This is what's going on. This is not good for the little guy. It'll be good for the idiot who got in early. It is terrible for anybody who gets in late, and that's going to be the vast majority of people. The memorandum concludes, regulators have expressed concern about Robinhood's investment platform. On December 16th of 2020, Massachusetts regulators filed a complaint against Robinhood for its aggressive tactics to attract inexperienced investors, its use of gamification strategies to manipulate customers, and its failure to prevent frequent outages and disruptions on its trading platforms. This is now here significance for investors. It is possible that the hearings may lead to additional legislation and regulation concerning the securities markets, but this is by no means certain. One thing that is certain, extended questioning about payment for order flow, the incentives that it creates, and the degree to which Robinhood engages in gamification are all matters that are bound to tarnish the company's image, but not necessarily to dissuade a significant number of Robinhood's clients or potential clients from using its platform. So this is going to be very interesting because this is a few different worlds colliding here. This is online trading platforms with zero commissions. This is social media. These are hedge funds. These are the markets. All of these things are converging. And this is going to be the start of a much broader conversation. It is a conversation that needs to be had across this country because this is beyond out of hand, and it's very likely going to get worse before it gets better. And then lastly, another article here. This one's out of the New York Post, just to highlight Roaring Kitty, Keith Gill, defends his GameStop posts amid lawsuit. Roaring Kitty. This is where we are. These are the headlines. I'm not making this stuff up. Oh, boy. A star Reddit trader known as Roaring Kitty plans to defend his bullish GameStop calls in front of Congress one day after being slapped with a lawsuit for his role in the trading frenzy. The trader, whose real name is Keith Gill, is set to testify to the U.S. House of Representatives Committee on Financial Services tomorrow about the manic rally last month that pushed GameStop's shares up more than 1,600%. 1,600% in just a few weeks' time. Gill, who used his online personas Roaring Kitty on YouTube and Deep Effing Value on Reddit to tout the stock, plans to say that he pushed GameStop because he believed in the company, and still does. Social media platforms like YouTube, Twitter, and Wall Street Bets on Reddit are leveling the playing field, Gill says in his written testimony released ahead of Thursday's hearing. And in a year of quarantines and COVID, engaging with other investors on social media was a safe way to socialize. We had fun. I wonder if those people who lost their shirts had fun. The idea that I use social media to promote GameStop stock to unwitting investors is preposterous, Gill wrote. I was abundantly clear that my channel was for educational purposes only, and that my aggressive style of investing was unlikely to be suitable for most folks checking out the channel. Well, as long as you put the disclaimer out there, no harm, no foul, right? Gill will also say that he didn't profit as much as some people think, saying my timing was far from perfect, and many of the options contracts I purchased expired worthless because GameStop stock price remained depressed longer than I expected. But in a lawsuit filed on Wednesday, Gill, known for donning a red headband surrounded by cat paraphernalia in his YouTube videos, was portrayed as an undercover trading mastermind who drove GameStop shares higher to line his own pockets. The class action suit filed in Massachusetts federal court on Wednesday took aim at Gill's online personas, saying he knowingly used them to create a fake populist attack on hedge funds and pump the price of GameStop, eventually creating millions of dollars of losses for retail investors who followed his advice. GameStop shares closed down 7.21% today to close at $45.99 per share, down from $483 per share, which was witnessed in late January. Indeed, in order to motivate amateur traders, Gill fashioned himself as a kind of Robinhood and characterized securities professionals as villains. This is the little guy versus the big guy narrative. Gill slyly targeted large hedge funds who had shorted GameStop stock as the evil, powerful big boys. This is according to the lawsuit. Only Gill was actually, quote, a highly sophisticated and calculated investor, end quote, and a registered stockbroker at MassMutual in Boston. And he had taken a substantial position in GameStop stock at $5 a share in the run-up to the social media-fueled short squeeze. Quote, Gill, however, is no amateur and no Robinhood, according to the lawsuit. Quote, for many years, he actively worked as a professional in the investment and financial industries, end quote. Told you, folks, this was not somebody on social media that didn't know what they were talking about. Whether it was an individual, which of course this lawsuit alleges, and of course Gill is entitled to his defense, or whether this was a sophisticated hedge fund on the other side, just trying to see what they could juice. The suit also named MassMutual, claiming the bank was legally responsible to oversee Gill as a registered broker. The bank is under investigation by Massachusetts regulators. Gill reportedly quit his job on January 21st and officially left MassMutual on January 28th, the day after GameStop stock fell 44% off its high. So there you have it, folks. I think those two articles do justice as far as summarizing where we are in this euphoria, I guess, with respect to the markets, with this mania, where we are with the markets, where we are in this decline and decay of the United States of America, better known as the First World Banana Republic. And we're going to see more circus tomorrow in Washington, D.C., with these characters that we call congressmen and women, with these people in industry on these platforms, pretending to look out for the little guy. Meanwhile, it's the little guy that continues to get screwed. And of course, there's going to be good arguments made about these technologies, these platforms, and how people can become engaged in the marketplace. And I believe at the end of the day, that's a good thing for more people to be involved in the marketplace. But these people who don't know what they're doing are being played. They're being gamed. And some of these platforms evidently are using strategies that casinos are known to use. Our markets are not supposed to be casinos. It's just not how it works. But people don't care because they think stocks keep going up. We have a country, an economy in decline. We have people that are desperate. And they think they can get a winning lottery ticket, by buying some stocks because somebody who they don't know, but they think is looking out for them, is going to make them rich. They don't understand the mechanics. They don't understand math. They don't understand finance. They don't understand economics. They just think stocks only go up. They just think that they're cool because somebody that they think that it's important or cool on YouTube or Twitter or social media, other platforms, are looking out for them. Nobody wants to take the time. Nobody wants to do the education. Nobody wants to do the research. Just follow the herd, follow the crowd. Most of these people are going to end up following the herd to slaughter. Following the herd over the cliff. And that's what bothers me the most. Because it's going to be more little guys than big ones that go down. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Koritis. Godspeed.